Hey everybody, it's Friday morning. Welcome, July 10th. I'm here with Michael and Alan, and we're going to do our Friday investment talk. July is turning out good as we predicted in our blog. So next week we should have a positive week. This week we had a pretty positive week. Last week we had a positive week. So Alan wanted to talk a little bit about gold. You ready, Alan?
Yeah, I have three things that we're going to talk about today. One of them is gold. I think this graph is just fascinating. So this is a inverse gold price against the 10-year real yield curve on US dollar yields. And you can see, so if you have to obviously flick your mind that it's an inverse price of gold. So you can see that 2008, we had a fall in the price of gold and we had a spike in real yields. And then over the next few years, we had a major bull market in gold. And then it kind of cooled off in the mid to late 20 teens. And now it started to kind of power ahead again. I just find it fascinating that you lay over the two curves and you almost have a perfect correlation. Now, there is no opportunity cost now in holding gold. There is no return on, as this chart shows, there's no income, there's no opportunity cost on holding US dollars, there's no opportunity cost, or there's no income on holding any other currency, just about, or any other stable currency. So there's no opportunity cost of holding gold. I think there's a bit of a difference between 2008 crisis and 2020 crisis or 2019-20 crisis. Central banks are a lot more flexible, or they're handing their money out a lot easier than they were in 2008. It was really only going to the banks. Now it's going to, they're buying bonds, they're buying stocks, they're giving cash away to unemployed people in America that actually now make more money than they did when they were working. I mean, it's a very strange situation. I don't know if you guys have any ideas or comments, or I don't know.
Yeah, I think that first of all, gold, this inverse gold is a little bit of a leading indicator on interest rate yields. And one of the things we talked about last time was tips. I don't want to go too much into depth about this, but you're now seeing negative real interest rates. With negative interest rates, you're looking at potentially a huge longer term inflation. If we can get out of COVID and people get back to work, we've mentioned this before. There's no inflation right now on the horizon. And
one of the next thing I wanted to talk about was going back to Chris. You made a presentation a number of weeks ago on dividend investing,
right?
Which was really fascinating. I think it's still available for subscribers to download. And one of the top things, there was a number of MLPs and various. We've gone over MLPs as well. But a subject that's close to our home, obviously, and literally close to home, is Russia. Russia and the RTS is down 20% approximately. There is 18% year to date. I mean, one of the reasons for that is that it had a very, very good year, 2019. I think for dividend investors, now is an interesting time maybe to look at Russia as a broad market. I think it depends which figure you look at there, Chris, but 6.5 or 9,
right,
somewhere in that area. I mean, that's pretty good on a main country index going forward. Especially a resource heavy, so an asset backed market, if you like. It's not all IT companies pumping.
Right. I think the point here, Alan, look, you're getting a dividend of what, 6% or whatever you said, right?
Yeah.
And at the same time,
at least. Yeah.
And you got a PE ratio under here of what is it? 6%. Awesome. So, I mean, like you're getting this is real ultimate value is Russia. Ultimate non-value is China. And that's what we're seeing right now is there's not a whole lot of interest in Russia in general because of it's so tied with the oil price. Oil is back at $40 a barrel or something. So it's like, okay, is there going to be really continued growth in this? Whereas you've seen China, especially this week, Alibaba, all these companies are going crazy, and that's where the tech money is, and everybody thinks that the rebound's going to come out of China first. So
we'll move on to China in a second, and probably Mike wants to get in at this point. But I think one of the things is that you're getting those figures, and it's down 20% year to date. This is not at a bubble point. This is at a low point or a relatively low point. Okay, Russia Chris and Mike, but particularly Chris, you and I have been told that Russia is cheap since we ever moved to Russia.
It's always cheap.
It's always cheap. It's
Yeah.
always, and it's cheap for reasons, which
Right.
we don't need to go into today. But Mike.
Well, I was going to say, it's interesting you say that about since you've moved to Russia. I moved to Russia a lot more recently, and people said to me, Mike, this stock market's great. It's cheap. You get paid to wait because the yield is so high, and all you need is the catalyst for change. And a year ago, when the RTS and MOEX were riding high and everyone was piling in, it looked like change had arrived, and the headlines were that, in particular, Russia and the ruble had moved away from this enormous dependence upon oil. And what we've seen with the coincidence of COVID-19 and an oil price war with Saudi is that Russia is anything but moved away from the dependence on oil. And the big fear I've got at the moment is also the dependence upon gas. And gas prices have gone through the floor and are not getting the same coverage as the oil crisis because it doesn't have the same PR value. And so the big risk for me in Russia, and I jump on the topic because I've got a lot of clients who were in Russia in 2019 and have seen gains unwind and are now bailing out at what they went into at the end of 2018, because combined with the display of dependence upon energy prices, there's a huge political risk which is factored into the currency risk. A lot of the positive reasons that were driven behind the 2019 increases have disappeared, and the political climate internal in Russia has not carried on improving. And I had only this week Petropavlovsk PLC, which had seen growth from a share price of, I think, less than 7 at the beginning of 2019 till 32 last week. And there was a boardroom coup, and the AGM was a shambles last week, and it was like reading a story out of history as to what was going on.
Or the 1990s, as Chris and I would call it.
Yes, exactly. So yeah, I guess this is why yields are good,
Yeah, I think we've heard the growth story or the potential for growth. We've heard, all the opportunities, and we have heard of the blame on the politics and the corruption and the crazy AGMs and everything that happened in Russia, the raiding and everything else too. But the reality is you're paying a price of, PE 6 for them because of that. And so when these things do rally, when there's sunlight, the plants grow. So sometimes you get those situations. It's hard to make any predictions about Russia. Basically, we refrain from kind of doing that. So I think we're going to talk now. I just wanted to bring up natural gas, and the play. One of the plays you can have on Russia is a play on natural gas, really, because they're also down 38%. This was the worst quarter. In fourth quarter, it's the worst performing ETF. It's also the worst performing and only negative performing Q2 sector. Look, the thing that did best in quarter two was not tech. It was copper, because everybody thinks the economy comes back, and the first thing they do is they start using wire to build things, and copper goes up. It's one of the kind of like canaries in the coal mine. If copper moves up, then the economy is doing good. And with the good news out of China, you saw copper it was the best performing asset class in quarter two, whereas natural gas is the worst. And I don't see any. We talked about this a little bit before too, that you need a catalyst for this to turn around. You need economic activity here. So Alan, you had one more thing you wanted to talk about?
Yeah, well, I mean, I stopped you when you were going on about Alibaba and other things in China. And if you want to continue that's good, because that kind of brings in the last topic, which again, topic close to my heart: China, Asia, East Asia in particular. Looking at number of markets and a number of stocks. So I mean, just very briefly, we talk about Thailand, which is one of the cheapest stock markets in the world right now, and is a great value play to buy, assuming tourism comes back from coronavirus. Thailand's GDP is 20% directly into tourism, and a lot more that's indirect. So maybe it's a good time. I mean, I'm a big fan of Thailand, Southeast Asian, ASEAN countries. But the one I wanted to talk about, which interestingly enough, Chris, you wrote a paper on it a couple of year and a half ago, approximately. But it seems to become the stock of the week or the stock of the month. Not Tesla, but the Chinese version of Tesla called NIO, which has just been on a bit of a tear. I mean, it hit a low of 2 earlier this year, and it's trading at around 15 now. They make electric vehicles. They're kind of as I said, the Chinese version of Tesla. I mean, one of the opinions and one of the reasons for it going up is obviously EV market is also a flavor of the month, but it also is the Chinese government, or many people believe, is not going to let it go bankrupt and will support it. A lot of government money going into it to basically lead the EV charge in that part of the world. I mean, it's a very interesting story. It's a cool story. Not quite as overblown as Tesla is or might be, depends who your viewpoint. But Chris, do you want to talk about? I mean, you wrote the paper.
Yeah, I mean, NIO's kind of been on our radar, but one of the things that came out this week was kind of related to that, and is a big thing from Merrill Lynch and their hydrogen fuel cells and the idea of electric vehicles, and we talked about natural gas, and this is potentially where a lot of interest and plays, not necessarily on the end consumer are going to be, but in kind of, they're going to be used electric fuel cells and hydrogen fuel cells in many industries. And there's kind of a nice write-up for public viewing, and I can post that link in the text of this video, so people can go and check this out. But this is kind of about power generation and stuff. And this is actually where natural gas could begin to see some interest. And you know, when you're down as the worst ETF for the last 2 or 3 quarters, it begins to raise a little bit of a level of interest in that things could turn around. If you're looking for a value play, and there's going to be some growth in these fuel cells, especially ones that use gas or electric power, then this might be a play. So that just kind of reminded me of that. But yes, going back to China, Alan, we, you know, Monday was the big boom. If you had Alibaba shares, you made 5% in a day. But there's been a lot of things have been on a rip since then. And again, it's the tech stuff. It's Tencent. There was an investment from Sony into Epic Games of $150 million this week. Epic Games makes my son's favorite game, Fortnite. And so
Freudian slip there, Chris.
We heard the sun came in afterwards.
Yeah, okay. Well, my son's mine. I had to play it with him. I had to try it out. So
kicking and screaming, Chris.
But yeah, I mean, you're seeing a lot of interest in gaming stocks, in online use stocks. Amazon, Netflix again. Roku was up, I don't know how much, 12% this week. I had some stock in Roku. There's a lot, and I feel like when there's trading times like there are now, there's really interesting stuff to be doing. I should be publishing more on Telegram and making people aware of what's available. I did publish on Telegram a couple things that I want to bring up, which is kind of this is a bit long-winded, but I do want to bring up the fact that we did look at 2 things this week. One of them was semiconductors. AMD is outperforming Intel, and NVIDIA is already having a market cap of higher than Intel. So you're seeing, again, gaming or GPU related producers outperforming typical computers or server chip makers. And the second thing that Alan mentioned was the tourist industry, and this is the cruises, the Carnival Cruise Line, Norwegian Cruise Line, Royal Caribbean. If Thailand's going to come back, then the cruise ships have to come back. And these are basically seeing no new bookings, obviously. And it talked about when they interviewed these 3 companies, 40 to 50% of the people offered vouchers for cruises that they had previously booked, took cash instead. So the new bookings that are being booked are made on vouchers, and there's no new cruise, and there's going on, and there's also there's no new market. There's no market for cruises, and even the vouchers are kind of like give us the money back, which is going to put a lot of pressure on their debt situation. So this is a sector. Even though you see some run-ups in this by these Robinhood traders and day traders and some of these stocks, this is a dangerous sector to play in. So
are these likely to survive, Chris?
Yeah, I think they're going to have to restructure debt, and they'll probably go bankrupt. There'll be some kind of bankruptcy proceeding and stuff like that.
Even as we speak, Carnival is up 4.45%.
Yeah, and Hertz, when it went out of business, went up 100%. So if you want to sell the debt and buy the stock, because that might be a good trade, Yeah, so we see a continual rotation into tech away from every other sector. We saw it yesterday. We're waiting for the value play to come in. That'll be kind of the end of the market, and then it'll probably the whole thing will collapse. We'll talk about that next week.
Just one last thing, Chris.
Yeah.
A bit of an AVC plug is that we have an excellent seminar on AVC Health, on living with coronavirus.
Yeah.
It's a great presentation by Yulia, and it's kind of sobering, but it shows that people that have the correct type of insurance don't need to worry about these things, and they're well taken care of.
All right, then I think that's it for today. Have a good weekend, guys.
And
see you all next week.
Yeah, take care. Bye-bye.
Bye-bye.